Most beginners think $100 is too small to invest. In 2026, it might be the most powerful $100 you'll ever use. This video gives you a step-by-step roadmap to start investing in the biggest trends, even on a tiny budget. Stay until the end, because step 5 is where beginners quietly separate from everyone else. Most people guess their way into investing. This time, you'll follow a map. The strange truth is, investing isn't about picking winning stocks. It's about building a system. Let's build yours. Step 1. Prepare the foundation. Every investment empire starts underground. Skip this step, and everything collapses later. Before you buy anything, you need stability, because the market rewards patience and punishes panic. Your first investment isn't a stock. It's a safety buffer. Step 1 is building a small emergency fund. Even $300 to $1,000 protects you from selling investments at the worst time. Then you reduce high-interest debt that quietly eats returns. Once your foundation is set, you're finally allowed on the real road. Most beginners skip this. That's why they quit during the first market dip. You won't. Step 2. Open the right tools. You don't need Wall Street connections to invest in 2026. You just need the right tools. Modern investing happens in apps. No paperwork. No brokers. No minimums. The game has changed, and beginners finally have the advantage. Your roadmap starts with 3 tools: a long-term tax-advantaged account, a simple brokerage account, and an optional automated investing app to keep things effortless. In the US, tax-advantaged accounts give beginners a hidden turbo boost. Globally, modern apps now give access to worldwide markets from one phone. Now that the doors are open, we decide what to buy. Step 3. Start with the market itself. Your first investment shouldn't be a single company. It should be the entire market. Individual stocks can soar or collapse overnight. Beginners don't need that stress. Picking stocks early is guessing. Owning the market is strategy. A broad market fund automatically spreads your money across hundreds of businesses. One purchase. Instant diversification. Tiny budget, big exposure. You no longer need to be right about one company. You just need to stay in the game. Once your foundation is set, now we aim your money toward the future. Step 4. Add the 2026 trends strategically. This is where your portfolio stops being average and starts leaning into tomorrow. You don't go all in on trends. You tilt toward them carefully. Going all in is gambling. Tilting is investing. Most of your money stays in broad market funds. A smaller portion goes into future-focused sectors. A tiny slice stays flexible for opportunities. You're not buying hype. You're buying exposure to systems shaping the next decade. These trends are worldwide, so your investments quietly become global too. Small budget, smart structure. Now your money has direction. Step 5. Automate the process. This step is where beginners quietly win long-term, and most people never do it. The secret to investing isn't timing the market. It's consistency. Manual investing relies on motivation. Automation relies on systems. Set an automatic monthly transfer. Even $25 or $50. No decisions. No hesitation. No missed months. You're investing while you live your life. That's how wealth compounds quietly. After 1 year, they look the same. After 5 years, one is far ahead. After 10 years, the gap is shocking. Step 6. Learn to ignore noise. The market will try to scare you. Every single year. Financial media runs on fear. Fear creates clicks, not wealth. The less noise you consume, the better your decisions become. Markets fall. Markets recover. The long-term trend rewards patience. You're no longer reacting. You're executing a plan. Step 7. Upgrade your knowledge system. The final step isn't money. It's mindset. Markets evolve. Trends shift. Investors who keep learning stay ahead. A static plan gets outdated. A learning investor adapts. A short monthly check-in. A yearly rebalance. A weekly dose of education. You're no longer guessing. You're growing. Step 8. The small budget reality. Small money grows slowly at first. Then suddenly, it doesn't. Compound growth is invisible early. That's why most beginners quit too soon. Dig it up every week. And it never grows. The first $1,000 feels slow. The next $1,000 arrives faster. Momentum builds quietly. The goal isn't quick riches. It's permanent financial momentum. A good roadmap isn't rigid. It adjusts with the road. Once per year, you check your portfolio. Not daily. Not weekly. Watching daily creates emotion. Reviewing yearly creates results. Rebalance. Return to your plan. Keep trend exposure aligned without chasing. You're not reacting to markets. You're steering through them. Time is the most powerful investment tool. And it's free. The earlier you start, the less money you need later. One starts small. One starts big. The small starter wins. Consistency beats intensity. Patience beats prediction. Systems beat luck. You're not building quick money. You're building freedom. Foundation. Tools. Market core. Future trends. Automation. Noise control. Learning. Patience. This is how beginners quietly win in 2026. Not by predicting the future, but by positioning for it. You don't need a big salary. You don't need perfect timing. You just need a roadmap. In the next video, I'll show exactly how to choose your first future trend investments without falling for hype. Start small. Stay consistent. And let time do the heavy lifting.